We are focused on the tax return preparer due diligence requirements found in Section 6695G of the Internal Revenue Code. This is a heavily tested area, specifically concerning returns that claim the Earned Income Tax Credit, the Child Tax Credit or Additional Child Tax Credit, the American Opportunity Tax Credit, and Head of Household Filing Status. The linchpin of compliance here is Form 8867. The Pay Preparer's Due Diligence Checklist. The exam will not just ask you to list the requirements, it will test your application of them through difficult scenarios. There are 4 pillars of due diligence you must master. First is the knowledge requirement. This goes beyond simply knowing the tax law. It means you must make contemporaneous client inquiries and document the conversation to ensure the client is eligible for the credits they are claiming. For example, if a client claims head of household status because their 25-year-old child lives with them, your knowledge requirement dictates you must ask follow-up questions. Is the child a full-time student? What is their gross income? Do they provide more than half of their own support? Simply accepting the client's initial statement is a due diligence failure and a classic exam trap. The second pillar is completing and submitting Form 8867. This form is not optional. It is your roadmap and proof that you followed a diligent process. The exam might present a scenario where a preparer completes all the necessary inquiries but forgets to file Form 8867. This is an automatic failure. You must also complete the credits or claim HOH status based on the information provided by the taxpayer after making the necessary inquiries. The third, and arguably most critical for audit purposes, is record retention. You must keep a copy of Form 8867, the worksheets used to calculate the credits, records of your inquiries with the client, and copies of any client-provided documents you relied on. These records must generally be kept for 3 years. A common exam question involves a preparer who is audited and cannot produce the notes from their client interview. This lack of documentation is a violation. Another frequent exam trap involves divorced parents and the Earned Income Tax Credit. Imagine a client states their child lived with them for 7 months and they want to claim EITC. A non-diligent preparer might just file the return. However, your due diligence duty, the knowledge requirement, compels you to ask about the other parent. Where does the child live the rest of the year? Is there a custody agreement? Failing to ask these questions and apply the proper EITC tiebreaker rules when necessary is a clear violation that the exam will test. Let's consider another exam-style problem. A new client wants to claim the American Opportunity Tax Credit and provides you with a receipt from the university bookstore. Due diligence requires you to ask for Form 1098T. If the client doesn't have it, you must inquire why and document their answers, ensuring they meet all the AOTC requirements, such as being enrolled at least half-time. Relying solely on a receipt without further questions is a failure. The penalty for failing to meet these standards is severe and a favorite exam topic. For 2025, the penalty is $600 per failure. It is crucial to remember this is per failure, not per return. If you fail to meet due diligence for both the EITC and head of household status on the same return, you are facing a $1,200 penalty. The IRS is not lenient here. To help you remember the 4 key requirements, use this phrase: kings can't refuse documents. This stands for knowledge checklists like Form 8867, record retention, and documentation of your inquiries. Kings can't refuse documents. Master this, and you will be prepared for any due diligence scenario the exam throws at you.